Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's doing well. Happy Thursday. Happy day after Kapow. All right, so we're taking a look at what we are inheriting in terms of the mood of the market. Now, before we even got to where we are right now, what has preceded the price action? What is price action having to deal with? Three places we'll take a look. We could take a look at the Dow or the S&P and the Nas. S&P is an easy way to kind of look at both at the same time. And we're taking a peek at the 5-minute chart and a little bit of weakness, as you can see, since about 8:15. All right, if you see an 8:15 move, and I know a lot of you will say, okay, Rog, let's go take a look at what was on the calendar. It wasn't in the US, gang. It was the monetary policy statement and the refinancing rate for the European Central Bank. That was the 8:15 reaction in the US markets to what Christine Lagarde and the ECB were doing. All right, then we fast forward to 8:30, where we see a little bit more of a reaction, and that was, it was Empire State, Philly Fed manufacturing numbers, initial claims. What else did we have? Oh, and retail sales. So all of that hit the market at 8:30. Interestingly enough, that's where, after the European Central Bank hot zone, it seems that we're bottoming out and moving back higher. So remember, when we look at reactions, sync it up to what's happening on the calendar, look at the actual candle around that time for the reaction. So right now, when I look at the S&P, and let's make sure we kind of take a look at TradingView as well as the Thinkorswim platform, you'll see that the overall movement on the daily time frame of the S&P is still doing battle more or less with that 200 exponential, but you can definitely see the bullish momentum that was set by October 28. And then here, as we go into December 15, while it's not an uptrend yet, while we are not firmly established above that 200 period exponential moving average, it sure is trying. It sure is giving it a good old college try. So that is what we have right now. Now remember, we're in the process of rolling over. The 12th of December was the roll date. And remember, the expiration is this Friday, tomorrow, the 16th. At that point, all the open interest, all the volume will be out in that March, that H contract for the futures. All right, so that is what we have this morning to kick things off. And let's go ahead and jump into the questions. Hey there, good morning, CJ. Good morning, Ann. Great to see you all. Good morning, Mimi. Yes, it is great to be back. Thank you so much. I appreciate that. All right, first question of the morning comes from Prince. If I miss, say, an agro trigger, so that's the first of the three triggers that I'll look at. On the way, let's see, agro trigger on its way to the wave or HPMR. Can I just put my order in as it goes back up? If you miss your agro trigger, why not take a look at the moderate and conservative as well? Remember that we establish a zone, not just a singular level, in the way that I teach you all to scale in. So sure, if you miss the zone, I don't mind you looking for some price improvement. There's no problem with that. We want to just simply confirm that the trade is valid, right? Is the trade still valid? So I would be more concerned about structure, maybe in that quote unquote miss, and then take advantage of the price improvement if possible. All right, question from our free trading room, LA. Thoughts on shorting the ES on a bounce? And if so, what levels would be appropriate? Okay. So if I'm going to short it on a bounce, well, I'll break it down two ways here, LA. One is if I'm day trading, one of the things that I'll look for is an overbought slow stochastic or resistance at my V-score. One is price, slow stochastic, the other is volume, V-score, and or I'll look at the hourly price movement range. Where's my drawing tools here? I'll look at the price movement ranges as soon as I bring my drawing tools up. There we go. I'll look at my HPMR up in here, and that would be another zone of resistance up in that area. So that would be all intraday. As far as end of day goes, I can still short the ES. This is true. I might do so in the upper end of the daily price movement range. You can see we've been rejected from that on the 13th. We've been rejected from that on the 14th. Sure, as we close in on, say, 40.65 to 40.70, that zone, we might have an aggressive edge for a short there. Overbought stochastic would be great. So if you're looking for a short from higher, buy from lower. That's been my mantra throughout most of my career. And that does seem to put me in a much easier spot to manage risk. Much easier spot to manage risk. You know, I made a tweet this morning. I like to tweet. I think I posted it on my Insta as well. But where is it? Here we go. There we go. Manage risk like the trade is going to lose. I always presume my trades are going to lose because that's the only part of the trade I can control. Set targets like the trade won't make a new high, and position size to be able to trade again tomorrow. That's it. Everything is predicated to what is it going to cost me if I'm wrong? Yeah, and as long as we focus on that, we always have another at bat, right? So that's the way I'll look at, that short from higher, buy from lower. All right, next up, what is the approximate time period for the window dressing? Editor, I'd say anywhere from, where we are right now. I'd say all of December is pretty much window dressing, up until the last trading day of the year. It'll get a little bit more intense as we wind down, but I'd say pretty much any time in December, definitely from mid-month to the last trading day of the year. And the last trading day of the year is going to be what? The 30th? Friday the 30th? So I would say anytime between now and then. All right. Okay, next up is, let's see, Chris asks, hey, good morning, Chris. Am I using trade tracking software to help me track my win rates per symbol and win rates on different hours of the day, or am I doing it manually? Chris, I will tell you this, and it's probably kind of heresy as a trader to say this. I loathe spreadsheets. I hate plugging that stuff in. I'm not good at those macros and the cells. Oh my gosh, I'm awful. People who have that Excel spreadsheet, remember Lotus 123? That's where I first learned to hate spreadsheets. I envy them to a certain degree because some people love getting in there. I don't. I use trade tracking software. It's easy. It's designed for people like me. It's visual. It organizes things in a way that I find far, far more simple. So the best trade tracking software is the one that you're going to use. And for me, as of the last few months, I still use Wingman Tracker. I've been using that one for about 4 years, 3-4 years now. And I've been using TradesViz a lot more. TradesViz. So yes, I use trade tracking software, and that makes it really easy when we all start talking about which days of the month, which days of the week, which times of day. I know that I am less than awesome. How do I recognize that? And that's what I use. Absolutely. Thanks for the question, Chris. All right, next up, coming from our free trading room, Popeye asks, can my HPMR levels be used to show supply and demand if used on, say, a weekly or monthly time frame? So I've been getting questions about supply and demand. I don't look at the market in that regard. I look at the market in terms of support and resistance, buyers or sellers. So if people ask me supply is selling, it's resistance. Demand is buying, it's support. So however we want to phrase it, Popeye, yeah, I don't think in those terms. And by the way, that's just another way of saying support and resistance, as almost everything in the market is, including my hourly price movement ranges. So the answer to that is not on HPMRs. One of the things that we've been testing now, hey, bot, I don't know if you're out there listening at the moment. What's it been, about 4 or 5 months now that we're on the DPMR testing, stress testing this thing? I can't remember. 4 to 5 months now on DPMR. So I like to get about 6 months minimum of just test with trades in the real world. And that's where we are right now with DPMRs. This is probably not going to be their final visual, but this is just sort of the beta. DPMR. So HPMR is hourly price movement range. DPMR is daily price movement range. And I would use the D version, the daily price movement range for daily or for weekly. And again, if I look at the red zone, that's resistance. What is resistance? Resistance is selling. What else is resistance? Resistance is, in many ways, what would cause a market to move lower? Oversupply, supply, right? And then demand to me is buying. Buying is support. Buying would be the green zone. And that's the way I break that down, Popeye. So I hope that makes sense. All right. Yeah. Okay, cool. Cool. Thank you for the question. All right. Next up is, let's see, have my views on XLF changed, or am I still bullish? Has my view on XLF changed? Sure. Let's go take a look. Thanks for the question, Christine. XLF is the financials ETF. So think Berkshire, think JP Morgan, Bank of America, Wells, Citi, etc. So my view on it has not changed. It's still north of the equator. It's bullish. It's in the bullish hemisphere, if you will. And yes, I am still bullish. However, my tactic will have changed. The way that I want to enter this, the strategy, right? Structure dictates strategy. And my strategy will have, as of specifically December 22, it will have changed. And I'm looking a little bit more towards, say, a 34.50 zone for an oversold buy. So I'm still bullish, but we switched, we updated the strategy because the actual structure has also updated, has changed. Thanks for the question. All right, next up, Eric, is it likely the bears are out of hibernation since the hawkish tone yesterday, or will we remain on a bull run? So again, remembering that I don't know where the markets are going to be going. I'm not going to pretend like I know where they're heading, and I'm not going to ever rely on my trades to somehow see the future. However, with that being said, the overall direction, the path of least resistance is definitely up. To your point, Eric, I still believe we're more or less up. However, we have to be in this environment of coming out of chop. This is where there's a time where it makes sense to be a stock picker, sector picker, and there's a time where it makes sense to just play everything, right? Go broad, cast a wide net, play tides, not boats. In uptrends across all three indices, when we have that level of risk appetite, that level of clarity, sort of the buy everything mentality, go sector, go index, works better. We're able to put a skin in a lot of games, a lot of individual symbols. But coming out of chop, we have to be discerning, and that's the stock picking time. The Dow is our best trend amongst the three indices by a landslide. It's much more sure-footed. We seem to get quite a bit of support at the 34 EMA high and at the 21 period EMA. And so if you ask me in the Dow, right? If you ask me the Dow, yes, I do presume that will continue to move higher. If you ask me about bonds, yes, I will presume the bond market, the 30-year, will move higher. If you ask me about gold, right, getting very specific, yes, I will presume that will go higher. If we take a look at the euro, we have the ECB today. Yes, I do presume euro will go higher. That means dollar will go lower. And then if I look at individual sectors, healthcare, yes, I do believe the path of least resistance is still very much bullish for healthcare. So we have to be really specific, gang. I try, even with myself, I don't want to say the markets, right? 2020 and even 2019 got us mentally, all of us, right? Got us verbally and mentally kind of lazy about, well, what are the markets doing? There's actually very different trends depending on the symbols that we're using. And I think that shift through 2022 has been an important one to think about which symbols are in trends. Because if I now contrast what I just showed you all with XLY, that's some chop suey right there. What about the NASDAQ? The NASDAQ's not in a trend. It hasn't been in a trend since August, right? If I take a look at the XLC, pretty ugly, right? It just barely come out of a downtrend and it's still chopping. So this is where I get very specific. So I hope that makes sense, and thank you for your question. All right, moving on to our next question. Is it time to get long in Walmart? Pulling back to the Darvis level this morning. This would be very similar, Dustin. This would be very similar to what I just described in XLF. For those of you who are wondering, what kind of trades are these? These are trades where structure dictates strategy, and I am focusing on sectors, really index sector stock is the hierarchy. So Jerka, or how are we? I'm sorry if I'm mispronouncing your name, Jerka or Jerka. Can I give some examples of what kind of trades? This would be a really cool example, right? XLF. We've been looking at XLV, but I want to contrast the difference between PFE and XLE, Pfizer and healthcare, with, say, right here, financials and Schwab, right? Schwab wasn't an uptrend. We went right into, as you can see right here, got some interesting headlines coming out of Schwab. Hey, my Sector Secrets Mastery folks, we might look for some fading action here on Schwab. But yeah, the difference between, say, going S&P and saying that healthcare and financials are likely relative outperformers, definitely healthcare, that's a big part of it. Now, back to Walmart. Walmart is very much a conversation around this symbol, right? Dustin, if I like XLP, there's not a lot that I won't like about Walmart. However, let's do this. This is a big part of what we do in the mastery, the Sector Secrets Mastery as well, which is we crack open the indices. We crack open the sectors, and let's take a look at Walmart from that point of view, Dustin. Is Walmart going to win in a relative outperformance discussion? Probably not. So what I'll say is, Dustin, I kind of thank Walmart for introducing me to its friends, right? And I look at Procter & Gamble, Pepsi, Coke, Altria, Philip Morris, Mondelez, Clorox, Estee Lauder, and even XLP, the Tide itself, and say I'm probably better off in that corner of the market. Yeah. All right. Next question is, what is my setting on the slow stochastic? It is a 21K 3D with an overbought at 80, oversold at 20. All right. Got a request coming in about Tesla. Where is it today? It's still in, I would say, this is the technical term, dumpster fire status. Be wary of the XLY because there's a lot of Amazon and Tesla and XLY. Yesterday, I mentioned, hey, gang, we're likely going to see weak stocks getting weaker into the wrap up of the year. We're going to see strong stocks getting stronger as we wrap up the year. Why is that? Tax loss harvesting, window dressing. You do not dress your windows with Tesla, right? If I'm putting my best foot forward in that showroom window, is Tesla and Amazon going to have anything to do with that? Absolutely not. What will? Healthcare will, no doubt. We're going to see, say, markets like TLT. TLT probably will. I'd say healthcare is going to, have a better chance of being that market that has been strong the last 2 or 3 months and will likely continue to be strong in window dressing. And Tesla will likely not benefit from any kind of bottom picking until mid-January to mid-February of next year, because that's where portfolio managers and money managers get to say, all right, I've got 12 months ahead of me, 11 and a half months ahead of me. How do I position the portfolios that I'm managing for the greatest upside? That's where we'll probably see some of the bottom picking, but not at the end of the year. I think window dressing, tax loss harvesting will be more a part of that. All right. Okay. So gang, just like that, thank you for all the questions, by the way. Our 20 minutes is up. It sure does fly on by. Thank you so much for always being here for Charts and Coffee. I appreciate y'all. Caffeinate and Dominate crew. I haven't talked about Countdown Trader in a while. That is what's sitting along the left side of this page. That is my blog here with Simpler Trading, where we have a lot of resources and analysis and explainers on my indicators. CountdownTrader.com. Trish does an amazing job of curating the most powerful tactics that we share with you all, explainers on my tools, as well as recent analysis. So it's a great thing you can have access to in between our Charts and Coffee shows. All right, gang, be good to each other. I will talk with you tomorrow, same time, same station. And that's where, again, remember, gang, that's where we are in this point of the year. Don't look for bottom picking yet, and assume that strength is going to remain strong, weakness is going to remain weak until early next year. Okay, gang. Until then.